I'm very intrigued by this idea that going back to normal may not be, so exciting and perhaps a bit fanciful. Is there a time that you can think of that was a normal we should want to return to?
Well, each era has its has its pros and cons, and of course, post World War II, America really, post World War II and then post Cold War, it was a unilateral moment where America's leadership across, pretty much every dimension, economically, militarily, technologically, was, orders of magnitude larger than other countries around the world. That world's changed. And so the things that we could take for granted in the previous, 30 years no longer are the case. And so, as I said, there are pros and cons of every area. This era is going to require, sort of going back to basics, as I like to say, going back to the gym and doing the things that we need to do as a country to make sure our building blocks of power, economic power, military power, are intact, and that we're doing all we can. So our solutions for America's role in the world are much more in the things that we do as opposed to the things that others do. And I think having that focus. So I guess if I was going to sum up in one sentence, I think China has a plan for global leadership. I think many countries in the world have a plan. What's our plan? What's our plan to ensure continued global leadership across all the dimensions of power? I don't think that plan's very clear, and I think that should be the focus of our policymakers in the coming months and years.
It's probably fair to say, David, that the economy of the 2010s was defined largely by monetary stimulus, rising asset prices, and widening inequality. Now, of course, we have a pandemic. Should the Federal Reserve be juicing markets this aggressively, or is now the time to start putting the genie back in the bottle?
Well, it harkens back a little bit to my time in 2007 and 2008. It's very similar in some ways and different in other ways. But the bottom line is we're at a moment where we have the health crisis and the economic crisis, and we're really at the end of an era and in the midst of a paradigm shift where our ability to respond to the economic challenges we have with monetary policy alone is much more limited than it has been because of the enormity of what's already been done and the low interest rate environment we live in. And as a consequence, we think we're going to see much more of MP3, which we refer to, which is the combination of fiscal and monetary. And unfortunately, at this moment, there's going to have to be a lot of policy intervention to get us through this patch. The consequences of not responding in a very forceful way are pretty dramatic. But like anything else, taking big steps like that in public policy have enormous second and third order questions, and or second and third order consequences rather, and we're gonna have to deal with those. And so we're gonna have to deal with the added indebtedness and the challenges that faces, and eventually we're gonna have to begin to transition back to more normalcy in monetary policy. But I think that the time to do that is likely much more in the future than in the immediate.
David, you're not one of the investors at Bridgewater. That's up to Ray Dalio and Bob Prince and Greg Jensen principally, but you're a very astute observer of financial markets and a student of markets in the economy. There's a lot of talk these days about a bubble. Do you think we're in a bubble?
Well, I think we're at a moment of enormous uncertainty where public policy is having more of an impact on markets than certainly at any time in my adult lifetime. And so that has a number of consequences to it. And what we're seeing is really a divergence of how the real economy and the markets are responding to what's happened. And eventually that divergence will have to be reconciled. But in the immediate term, because of the likelihood of continued policy response, I think we're going to see market behaviors that are very, are very broad ranging in terms of how things play out. And the reason for that is you've got the dynamics of the pandemic and the uncertainty around that. You have the dynamics and the uncertainty around the policy response. You have the uncertainty around our political situation and polarization that we see. And you have the uncertainty globally and geopolitically with US and China. And what that means is the range of possible outcomes for investors is extremely broad. You could have everything from a Japan-style recession, depression over the next decade, or a 1970s stagflation. And so if you're an investor or a policymaker, you need to be thinking about that broad continuum of possibilities. And so that creates a lot of uncertainty in markets and a lot of uncertainty for policymakers.